Okay, so let's have a look at part E, a bit of theory. So all this theory you can get from the website and from the booklet that I've done up for this. So it says outline why budget control is necessary in an organization. So you might have 3 or 4 of these. So budgets are a roadmap for a business and help them to achieve their objectives. It provides direction and motivation to staff to help them achieve their targets. To help identify future costs and revenue in order to plan inflows and control costs. To help production levels to achieve by preparing a raw materials budget. So how much do we need to produce or buy of the raw materials to produce the units. To ensure that there's enough staff in all areas that orders will be met. So especially on busy periods around Christmas or summertime. To ensure that resources are used effectively and be able to be capable to changing in circumstances, and to compare budget figures with actual figures and identify variances. So basically, a variance is a difference. So if you budget for something, you're either going to meet that budget, so that's your actual figures, or you're going to come in above it or below it. And you need to identify why have you come in below it or why have you come in above it, and put in procedures in place so it doesn't happen in the future. Part 2, in relation to budgets, explain what is meant by a favourable budget and give an example of how it might arise in the direct costs of a manufacturing firm. So a favourable budget or a favourable variance is one which when actual costs are less than budget costs. So you've budgeted your costs, and then when you actually come and do your budget, they've actually come in below it. So you're saving the company money. So it's a favourable variance. For example, the purchase of raw materials is less than expected because of economies of scale or discount on early payments. So we're going to buy raw materials. Because we're buying so much of it, we're going to get a discount on it. The less labour wages are required to improve productivity from employees. So employees are more motivated. So we're going to work harder. So we're going to have less wages needed to produce the product. Higher cost of special equipment is less than expected due to a surplus of equipment on the rental market. And patent royalties costs are less than anticipated due to patents coming close to their retirement date. So that will link into your question 1 from your sole trader and patents being written off and that sort of stuff. So a bit of theory is becoming more important with the subject. So it's important that you learn it off. Look at past exam papers, do out your notes, and make sure you write full sentences to answer your theory. It can be up to 10-15% of your paper. If you have any questions, please let me know.